Hi, everyone. This is Matthew Cruz at Comstock Investments. I'm going to be sharing with you the August supply demand report that came out from the USDA this morning at 11 a.m. Futures trading does involve risk, the risk of loss, and trading futures and our options is substantial, and each investor or trader must consider whether this is a suitable investment. So jumping in, some of the best news came in the corn today with the USDA did confirm the yield reduction that we were looking for. Obviously we were at 177 bushels per acre. The trade had been average estimate had been looking for as low as 173 to 177. And they actually came right in at 175.4. So they reduced that 1.6 bushels per acre. I think that's a good start. You're seeing at least the USDA acknowledge what's going on in the Corn Belt right now. A little bit disappointed in the soybeans. We'll get to that in a second, but I think it's a good start. And if we, unfortunately, with what we're seeing in the forecast, if things continue where they are to kind of remain dry, we'll probably see that number move lower yet. We're seeing some numbers as low as 172, and so they also decreased acres by about 100,000, and so that helped a little bit as well. And so that's why we came in with the overall production at this 14.35 billion bushel number, about 40 or so, 30, 40 million bushels less than what the average trade was looking for. And last month we were obviously at this 14.5, and so it was a pretty positive report for corn. However, it was kind of the opposite in the case of the soybeans. So similar to we were looking for a yield reduction in the corn, we were looking for a modest yield reduction in the soybeans, and the exact opposite happened. It was good that they did reduce the harvested acres 500,000. In my opinion, this is kind of the USDA's way of saying that they don't want to reduce the ending stocks too much, at least on paper, and so they reduced the harvested acres by 500,000. Now that should have reduced right there. You're reducing production by I think about 15 million bushels or so. However, when they increased the yield from 51.5 to 51.9, so they added 0.4 of a bushel, and so that picks up about 34 million bushels right there. So that offsets that loss in harvested acres. So we were looking for that reduction in harvest acres, and that did happen. However, it surprised the trade with by increasing the soybean yield by 0.4 per acre. I think with time you're going to see that go the other way and come back down. So I think this is the USDA's way of kind of trying to find a soft landing. But of course, the price in soybeans is down because of that today. So with their numbers, we come in with production at 4.5 billion bushels. The average trade was looking at for 4.479, so about 50 million more bushels than what the average trade was looking for. And so it was a pretty negative report. Looking at grain ending stocks for the three major crops, corn came in at 1.388 billion bushel carryover for new crop, slightly below what the average trade was at, but pretty close. Last month we were at 1.47, so a big step in the right direction in lowering those ending stocks and providing support to our continuing rally in corn. And so that's helped out a lot. Looking at soybean production, kind of the opposite. We're at still very low, but the average trade was for 228. Pretty close where we're at 230, instead came in higher at 245 million. Wheat was what I would call a bullish report. However, the market hasn't reacted that bullish to it today. So the trade was looking at 650 million bushels ending stocks. We came in at 610, and so lower by 29 million bushels lower than where we're at last month at this time. Just taking a quick look at global supplies, USDA has already come out with their estimates for next season's Brazil and Argentinian crops. Brazil is going to begin planting here next month already. They're looking at 149 million metric tons. So up 25 million metric tons from last season. Corn 126 million metric tons, where we're at sitting at about 114 million metric tons right now. Soybeans in Argentina 51 million metric tons for next year compared to 44 million metric tons last season. Corn at 55 compared to 53 million metric tons last season. With global ending stocks, corn came in at 306.7, lower than what the average trade was looking at, 309.8. Soybeans at 101.4, bearish because the trade was looking at 99.4. And wheat came in at very close, 267.3 versus average trade was at 267.8. So fairly neutral looking at the global ending stocks in wheat. And then the Chinese corn and soybean exports to China were stayed the same. They didn't make any changes there at 18 million metric tons for corn and 98 on the soybeans. So breaking it down, just taking a little bit closer look at what's happened in the corn balance sheet, you can see here they reduce the planted and harvested acres by 100,000 acres. This is where we get our 1.6 bushel per acre reduction. They did add 20 million bushels from last season's inventory. And so overall, our production is down 146 between this yield reduction and harvested acres lower, 146 million bushels there. But we add on the beginning stocks that we brought in from last year as our supplies down 127 million bushels. They also did compensate by reducing, similar to the soybeans, they're offsetting a lot of that by reducing some of the feed and exports. And so they reduced the feed by demand by 25 million bushels, the exports by 25 million. And so the usage is down 45 million. And so that's why instead of this, decreasing the supply by 127 million, we're only reducing the ending stocks by 82 million. And so that's what gets us from this 1.47 billion bushels from last month to the 1.388 billion bushels this month. So it's still a very bullish report, and the market is responding accordingly. Looking at soybeans, so you can see here where they reduced the planted and harvested acres by 300,000. And that's what we were looking for. But what caught the soybean market by surprise is that they increased the soybean yield by 0.4, which seems, I think a lot of people are going to be skeptical of that. The soybean market is down today, but not as much based on that. So I think you're seeing what the trade is responding to this and just kind of shrugging it off to a certain extent and saying, no, we don't believe the USDA. We think that doesn't make sense, and that things are not, not that they're disaster, but there's no reason to be increasing at 0.4 of a bushel. But this is what we have to work off of. And so, beginning stocks, they also increased 10 million from last season to this season. This is where we get the extra 26 million bushels production from this increase in yield here that offset the loss in acres. They did increase the exports by 20 million bushels. That helped. And so that's overall, we get our used increased 21 million from the exports and the residual, and but offsetting that the increase in production, that only reduced our ending stocks by 15 million bushels then. And so that's increasing our ending stocks from 230 to 245, which 245 is still very low, but the market was looking for, it's very sensitive at this point. It's looking for something below that 230 number. And so time will tell, but we think that the USDA will take that number in a different direction, the yield, and that the yield will be reduced given time. Wheat also had a slightly bullish day, I would call it. They reduced planted and harvested acres by 100,000. However, that was partially offset with a a slight bump to yield by 0.2 of a bushel. There's some minor modifications here or then on production. It just added 2 million bushels in the production. That's all that amounted to. Biggest news was they increased exports by 25 million. So they're acknowledging that what's going on with the world and Ukraine, that the USDA is going to have to, or excuse me, the U.S. is going to have to bump up those wheat exports. And so that's where how we drop our ending stocks by 29 million bushels from the 639 down to 610. And so wheat supplies continue to be depressed, and there's no reason, I think, to think that that will change anytime soon. However, I think the market didn't really respond quite positively to that today. It did bounce pretty hard off of its lows. It was down 30 cents at one point. But I think it is looking at what's going on in the Ukraine, and a few more of those ships that they're letting out through the grain corridor have been hauling wheat, which I understand that initially a lot of those were corn, and so they're switching some of that to wheat. And so I think maybe the market is looking at that, and more so than what the USDA report came out. Taking a quick look, this is just what the market's done today. Corn traded lower, and once that report came out, shot back up. So the chart is looking pretty good. Obviously, we're going to run into some major resistance here at this 638 level in new crop corn, and so we want to bust above that to kind of keep this rally going. You can see here we've put on about 60 cents here in the last few weeks, and so but it was provided more bullish support with what we saw in the report today. Soybeans did not have a good day. This is not the close, but they're down 18 and 3/4 cents in the new crop. But we'll have to see kind of how they close today. But they've had a pretty wild trading range, as you can see. But they have had a nice rally, putting on about 80. Let's see, yeah, 40, 70, 80 cents here since in the last week or so. Looking at wheat, you can also see wheat bounced off its bottom pretty hard here. At the moment, it was down 10, but it's moving pretty fast. At the moment, they're down 2.25, and so it's changing quite rapidly. And so hopefully it'd be nice if we can trade back in the green. It is going to run into some resistance if you can get back up to this 855, 860 area. But if we can break above that, hopefully we can begin a rally here. But it's possible, it does look that we might be forming a rounding bottom here, and carving out a bottom here in wheat. And in this report, honestly, there was, wasn't anything bad in the report today. And so I think the market is just looking at what's going on, with Ukraine and their ability to export wheat. So if you're a bull, you're going to talk about some of the success in that grain corridor that's been talked up is fairly limited. It's just slow getting those ships out. There's been a lot of concerns about quality. The cost of that grain is much higher than other places now, because the insurance cost is much higher, and it's very slow. And so it isn't taking off maybe as quickly as a lot of people thought. You can also point to some of the hot, dry forecasts and for the month of August, which is critical right now. I think if we don't, a lot of places don't see rain here in the next 10 days, you're going to see the corn and soybeans continue to suffer. And I think we're probably closer to 174 right now, and if things continue the way they are, that we could see it drop to 172, the overall corn yield. That's just my opinion. Looking at, if you're a bear, you can point out that, hey, the grain corridor is slow, but it's going to strengthen over time. It's going to pick up, and it's just a matter of time before shipments are back to normal. Crop conditions aren't quite as bad as perhaps some of the farmers are making out. Of course, you point out the production in Brazil is much bigger for next year. Those are estimates, but if those come true, they're obviously going to eat into a lot of our export market here. And then, of course, the macro conditions are still uncertain. they've rebounded slightly, but we're still far off from our highs earlier in the year. Thank you for watching. If you have any questions, feel free to give one of our brokers a call. We'd love to chat with you. Our number is 712-227-1110. Thank you and have a nice day.